Well, good morning, all you sexy people, and Happy New Year. Today is January 1st, and I'm at it this morning doing my annual recap of the year, and I want to show you the best stocks that are out there. I'm going to give you 15, 16 of them, but I'm not going to analyze all of them. I'm going to analyze the top 10 stocks and kind of reveal the commonalities as we go along, and then you'll be able to see what I look for in stocks, and you'll see why these stocks are successful. And I'm not saying I picked them all, but I did pick a few of them. So, hopefully you'll get something out of this. Let's begin our review of the best stocks of 2024. Here we go. Okay, well, here's the list of the stocks. I'm not showing them all to you just yet, but hang with me, and then I'll show you as we go along. But it's more important not just to know the names of why these were, of what the stocks are, but why these stocks were the best performing stocks. And this is what I talk about in my program. My program, we try to find the best stocks, right? The right stock in the right market. And we've had a pretty good market this year until the last few days. The best stocks, the right stocks in the right markets at the right spot on the chart. And that's what we're going to be talking a lot about today, is this the right spot on the chart. It's like a tailwind for your investments. And then what we do is we squeeze the juice. We sell covered calls against these stocks. So as they go up, we're getting some income. And that works really well for us. Of course, if we could just pick the stocks and sit back and go play golf for a year, we would, but nobody knows whether the stock is going to go up. So we get our advantage by selling covered calls against them and bringing income into the accounts. But these would have been great stocks for you to be in for the whole year of 2024, because these are the best performing stocks. And I'll give you some commentary along the way. Here we go. All right, so let's start with number 10, which is Arista Networks. It's ANET is the symbol. And you can see here's Arista Networks, 12/31 the end of last year, 2023, okay? And so you're seeing that stock at $230 at an all-time high. Now, I want to just stop and say, but Mark, it's at an all-time high. Like, it's going to go down, right? That's what most people's brain says. It's like you're paying too much for a stock. Well, if you don't go to an all-time high, you're never get to a new all-time high. And that's what these stocks are going to show us. So Arista Networks here, ANET, is right around $235 or whatever it was per share. And then let's take a look at that chart. Now, so that chart has kind of been on an upward trajectory. You can see that upward trajectory here. That's what we want to see. We like to see stocks that go from lower left to upper right. If you're trying to fish the bottoms out of stocks, you're not getting the probabilities in your favor. So you got to change your mindset to, let's find the stocks with the right probabilities, the right patterns. And your brain is a pattern recognition tool, and you might as well use it. And that's why I study charts so much. I think there's a lot of history that tells us what the future could be. It's not for sure it's right. It's just probabilities, right? And so we want stocks that are going high and going higher from that high. So here's what we look at. So this is a nice looking stock. At its high, just kind of broke out from this little ascending base here. This is the real breakout in this candle here. It's a high volume breakout, and this is where it went. But even if you just caught it at the end of the year, you got it at 230. Here's what it looked like after 230. Now I put this little red mark to show you, hey, look, this is what happened after. It's post-split, right? And so you can see it's 230, but after the stock split, it's about 60. So it looks like it split about 4 for 1. So it went from 60 to 110 is where it closed at the end of the year. So almost doubled. Pretty good return, right? Most people are happy to get a 10% return in the market. This one was 10 times that. So let's take a look at why, and I'm not going to spend too much time on fundamentals because I do spend time on fundamentals in the course, but I just want to touch on some of the things that I see on the chart here. And I use Market Surge, and Market Surge is a cool tool because it puts fundamentals on the screen and it puts the chart on the screen, and then you can kind of analyze everything in one shot. But there's plenty of places to get all this information. I just like this particular paid tool. And so, you can look at what that looks like. 2023, they made $1.74. 2024, the estimate, and it's not in yet, is $2.19. That's a nice growth rate, right? You can see all these growth rates look really good. And then next year, or this year now, is $2.45. So there's a good growth going on. And you can see the earnings per share quarter over quarter and sales per share change, or sales total is, changing double digits. It's really good stuff. Earnings per share growth rate is 34 and return on equity is 36 without a lot of debt. A lot of really good stuff going on in the chart, and charts trade on their forward fundamentals and their forward technicals too. But you could see this stock kind of has been doing the right things, and it's continued to do the right things. I don't know if it's going to be the best one going forward, but Arista Networks was a great, solid performer. Let's go to the next one. All right, number 9 is TSM, and Taiwan Semiconductors is, look at that chart. It doesn't look that great, does it? It went all the way up here to 140, and it corrected all the way down to 60, and now it does have this lower left to upper right. This is a weekly chart, by the way, so you could see it broke out from the bottom. You wouldn't have been buying it here at the bottom, I hope. I mean, nobody knows what the bottom is, right? And so we have to wait for the bottom to build, and then there's usually a pullback on the bottom as these people make their money and take it out. And then all these people realize, oh my God, I missed this run up. I don't want to miss the next one. And so you see a couple of nice little breakouts here, and this would have been the official one if you had caught it in 2023, or at the end of 2022, I should say, too. But then it went up and it corrected, and then it had a beautiful breakout, high volume breakout here, corrected again. So this is a tough stock to stay in because it has these wild swings, right? But at the end of the year in 2023, here's what we looked like. Just over $100, about $104. Okay, so keep an eye on that. So the weekly action of late was what you're looking at. Here's the new yearly chart at the end of 2024. Wow, this is about where I was showing you on that other chart. Remember all this down stuff, and then it broke out. High volume. Look at all the candle changes here. I call them skyscrapers, and they're over the average. And this stock just took off from $104, and today, at the end of 2024, it's $198. So almost a double on this one too. But look at this. This broke out, changed personalities. It quit being so volatile, and it just kind of took off, right? So it went from 100 to basically about 200. And now it's consolidating. We're not talking about predicting what's going to happen on these stocks for the future, but that looks like a pretty good little setup for me. I just think it's, we got to analyze whether it's a good base to go in or it's a late stage base. So Taiwan Semiconductor is number 9. Let's go to number 8, CEG, Constellation Energy Group. This company was reformed, came back out in 2022, and obviously if we had bought it back when it IPO'd back in 2022 or restructured, we'd have picked it up at 40 and tripled it. But, it's at 120, and that's a good looking chart. Lower left to upper right, you would have had to sit through this if you bought back here. But if you bought back here, you'd have been happy to sit through this. You were always green, right? So that's the end of 23. Here's the end of 2024. This is what 2023 looked like. Let's take a look at the numbers over here. So we lost money in 2022, a year they kind of came public or whatever after the restructure. And then look at this. From a loss to 445 to almost a double, right? 826 is almost a double. You can see these numbers are huge, and they continue to go up. Earnings per share growth rate is tough because it factors in, the 3-year loss there. So it's tough to tell there, but return on equity is a little bit lower than what I thought or what I'd like, and debt is high. So this company was basically just set up for growth and macro stuff. So you can see that, in 2023, there wasn't a lot of macro stuff. It was kind of back and forth. It wasn't a bad chart. But in 2024, it's anticipating the macro stuff that's going on possibly for 2025. And the energy sector, I believe, is going to be a big one in 2025 as there's lots of profits going to be printed after a kind of a suppression of the energy groups. All right, so that's Constellation Energy. Really more of a chart play than a fundamental play on this one. All right. Let's go to number 7. Number 7 is Broadcom. I know they have a weird symbol because it used to be called Avago Technologies, but they kept that symbol. I have no idea why. They didn't call me. And you can see this stock was basically at the end of 2023, it was at $1,116.25. And it was making a little flag here called a high tight flag after a breakout. And this little flag tells me that there's a breakout coming in this stock. Now, if you remember, in 2024, it was a big year for chips, right? It was a big year for semiconductors. And Nvidia was one of those, and some of these other semiconductor plays got swept up in this, and Broadcom was no stranger to that. So let's take a look at the end of 2024. And here we are where it went, kind of broke out and finished the year. And that's a good breakout. I don't like the volume on the breakout. I think you need more volume on that, but it was a breakout nonetheless. Sometimes they don't tell you when it's going to go up. You just have to kind of watch it. That's why having a watch list is really important. So we went from that price there to this price, where it is now, 231. So it was just over 100. And let's look at all these numbers. Look at how blue and double-digit-y they are, right? That's the kind of growth you want. 423, 487, 635. You want that kind of growth. Earnings per share growth rate is 21%, blended rate, 52% return on equity, just a little bit of debt. Really good stuff going on the chart, at least as of right now. And so to me, it looks like it may even want to break out now. It's making another one of these little tight flags. So I'm not saying that that's what this video is about. I'm saying, hey, there might be something that we can look at for next year or 2025. All right, let's go now to number 6. Number 6 to me is a stock that I really shouldn't put on the list because I don't like the volume characteristics of it. But it did so well. You can see 238%. Let's look at why. The lousy chart, correction all the way down, and then we had this little breakout. And it really was many weeks in a row on a breakout, went all the way up here, corrected a little bit, made a little cup with a handle, and finally broke out with this handle. So this is looking really constructive at the end of 2023. So it filled the gap, and you know what I always say about gaps getting filled. So it's trying to fill the gap there. Now let's fast forward to 2024. You could see this is where that correction and filling the gap happened, and then the stock broke out from here, which was a couple $100. And it went to 500 before correcting back down to the 50-day moving average at the end of 2024. Looking at these numbers, they're not that impressive unless you like 300% growth for 2024, and that's probably what the market anticipated. But the blended rate is not even good enough to give us a good earnings per share growth rate or a return on equity. So you kind of just have to look at the late action to see, all right, the fundamentals were helping it, but there's a macro move to digitization on music. With Apple, Amazon, Spotify, and these guys with their podcasts, played a big role in this. So really good stuff going on in here. Not great fundamentals, but boy, that's a good looking chart for that year. Okay. All right, let's go to number 5. Number 5 I don't love because it's an ADR, an American Depository Receipt. So it's a foreign company trading in the U.S. using these receipts that they use to be able to trade a foreign company in the U.S. Nonetheless, I'm putting it on the list because it had a great return. It's SEA ADR, which is retail internet. And you can see this is just a horrible, horrible chart. Beautiful back here, horrible here. Horrible all the way. This was a bottom fishing play. It doesn't fit my criteria at all. I don't try to fish bottoms because you never know which bottom here is the actual real bottom, right? It just keeps going down, and it even tried to recover, and you got some more bottoms going on. So that's not that great. But nonetheless, this is a reality. Here it was at 40.50 at the end of 2023, and now you can see that arrow right there, where we had a lot of weeks in a row, some good high volume ones at the end, but unfortunately it was after the run up. But it was just a small little pullback, and then we had a good run from there. So the stock essentially went from 40 to 120 something before pulling back just a little bit recently. So there's SE ADR. All right, let's go to number 4. Of course, number 4 is Nvidia, and Nvidia is just one of those great stocks that outperformed a lot of stocks last year. And you can see it had a beautiful chart going into that. If you just kind of zoom out, we had to sit through this correction like everybody else did in 2022. A lot of people I know sat through that correction, and some of them sold at the bottom, and some just kind of got rid of it when the signs were below the 50-day moving average. That's okay, whatever. At the end of 2022 is when it started its little climb. And so at the end of 2023, you'd have been like, well, Mark, it's at 500 and it's stuck. Now, I'm proud of this one. I made a video of this back a year ago and said, look out for Nvidia. I think it's going to be one of the best performing companies of the year. I'm not right on a lot of stuff, but in this case, if you watch that video, I would have alerted you that Nvidia's got something going up. I saw this consolidation pattern happening, and it was a breakout from, I think the number was 507, if I remember my video correctly. And that's the end of 2023, 495. Let's call that print. Okay. So here we are at 495, and this is what the company did after that. Of course, it split, I think 10 for 1. And so here we are at 50 or 49.50, right? If you're using the old numbers. And so here we went from that all the way up to almost 150. So about a triple. It's pulled back a little bit, and I think it's consolidating here. It's a little bit of a late stage base. So I don't think we're going to get that huge breakout anytime soon until we get rid of all the sellers. But looking at all this stuff over here, 294%, 127%, lots of blue, great earnings per share growth rate, great return on equity, low debt, really good stuff going on with this company. Of course, they were AI. And so if you had looked at Nvidia a year ago, you would have essentially, almost tripled your money. So pretty good stuff from Nvidia. All right, we're getting close. Number 3 is Palantir, and this kind of snuck up on a lot of people, including me. I was looking at Palantir a long time ago before it dropped to $6, and then I don't pick the bottom, so I lose interest in these things that stop. But nonetheless, this was a good stock. I didn't call them. I can't call them all, right? But looking at the end of 2023, here we are at $17.17. On a nice little uptrend weekly, making a nice little pattern, right? After a crappy pattern for a couple years preceding. So, I wouldn't have bought back in here, but these are the times to buy. You can see where I've made some consolidation boxes on the screen. And then looking at that, $17. Now here we are. That's $17 there, and boom, it went up to $80, like almost a quadruple. Palantir was just a beast. And it still continues to be a beast. I just think it's going to consolidate up here. But look at why it was a beast. Like, look at all these numbers. Double digit, triple digits, right? Really good stuff. Earnings per share growth, 33%. If one of those people, let me just talk about this. If you trade on PE ratios, right? The forward PE on this thing is 161. You wouldn't have bought it. It was way higher than that before. So you don't trade on PEs if you're looking for growth. They kind of don't mix. So if you're one of those people that's like, well, the earnings is really, the PE ratio is really high on this, I don't want to buy it. Well, you're going to miss out on a ton of growth stocks and a ton of growth. Like a stock like Palantir, has a ridiculous PE, but that's because it's got ridiculous growth, right? So Palantir Technologies was a good one. It could be the good one going into next year, but I think it's got to consolidate probably around to 60. We'll see. All right, let's keep going. We got 2 more left. Of course, the next one is my favorite, and that is MicroStrategy. I'm a Bitcoin guy. I'm a Michael Saylor guy, and then therefore I'm a MicroStrategy. Michael Saylor is the CEO of MicroStrategy, who is doing some financial engineering to borrow money in fiat currency and put it into Bitcoin. And then when Bitcoin goes up, that's the yield that if you're a shareholder of MicroStrategy, you get. So you can see he's been doing it more of late, but he's been accumulating Bitcoin for the last few years. And so that's why he had this ascent, huge ascent, put it on the map for a lot of people. And then people were like, it's a bunch of crap. And they sold it all out until it dropped down to 140. Then it came back to 631.62. Keep an eye on that number. There's a split coming up, but 631.62. This last part of the chart looks good, doesn't it? Well, it was a breakout here and a continuation of a breakout. There's a gap up breakout. And so here we are at 631.62 at the end of 2023. Boom. End of 2024. Look at where that was. You'd had to sit through this little correction, and then we had this unbelievable high volume, 5, 6, 7 weeks in a row up, and then you were always in a cushion of green if you just kept riding that. Right now we're in a little bit of a correction because so many people are taking profits from this ascent, or maybe this ascent, or maybe even this ascent, right? Like this stock is just a superstar, and I think it's going to be one of those superstars. And a lot of people are saying, well, it's a Ponzi scheme and it's this and that. Well, then don't buy it. But if you like Bitcoin, if you like Michael Saylor, if you think there's no funny business going on, and I don't, but I don't have all the answers either. I could be wrong. Then MicroStrategy is one that I continue to be in. And so, plus it pays good juice if you're a covered call seller. So really great performance on MicroStrategy, which brings us to our number 1 top performing stock. And before I tell you what it is, I'm going to take a victory lap here because, I don't know, about 4 or 5 months ago, I said, hey guys, this thing is breaking out and it's continued to break out. And if you trade the breakout, you're going to make a bunch of money. And it sure turns out that I was right. I don't care about being right. I'd rather be rich than right. But when you get the combination of the right stock in the right market at the right spot on the chart, and then you squeeze the juice with covered calls, you create game-changing wealth. And this isn't about making 10% a year. Inflation's at 11. If you're not making 11, you're going backwards in terms of purchasing power. I say that all the time. Inflation's been 11.1%, at least my basket of goods, for the last 4 years, each year. So everybody says, well, just make 10% in the market and buy a big ETF or put the money in the S&P 500, or buy some bonds because they're down, whatever. That's all junk, guys. If you're not making 11% a year, you're going backwards. So you've now got to structure. It's a new world now. You've got to structure your portfolio not to be average, but to be above average. And I don't know of a better system, a better way than to use good stocks with covered calls. And I make videos about this all the time. So if you want to see some examples, you can check out my MicroStrategy anthology now. It's a long playlist that starts on November 20th. And it's just showing you what I do on MicroStrategy and how I make income, cash flow, because cash flow is so important on a stock that's going up. So these stocks that are going up are great cash flow machines. And that's what I'm doing. So let's go into the last stock. And the last stock is Appli. That's the one I talked about several months ago and said it's breaking out, and this was the #1 performing stock. Look at the return. It's 813%. Now, MicroStrategy, if it didn't have a 50% pullback, would have won. And it was winning up until like the last 10 meters of the race, right? And just because it's had a pullback in the last 4 weeks, MicroStrategy has now dropped to #2. So you can look at the #1, 2, and 3, 813%. That's 8 times your money, everybody. Right? That's 8 times. That's not 10% a year. That's 8 times your money in 1 year. And so why would you want to buy the S&P 500 stocks, the average of all the stocks that you know, McDonald's and IBM and Microsoft and Apple and some of these, but you're getting all the crappy ones in there too. If you got 500 stocks in there, you're going to get some dogs in there, right? And so if you can start to pinpoint some of these stocks, and I've made videos on several of these stocks this year. APO, I've made a video on. Netflix, I made a video on. ANET, I made a video on. Marvell, I talked about these stocks as breakout stocks or things that I'm looking at. TSM, I talked about. I think I did a video on Broadcom. I can't remember exactly. Nvidia, I talked about as one of my big stocks for 2024 at the beginning of 2024. Palantir, I've only just started talking about it lately, so I kind of missed that one. MicroStrategy, you know what I'm thinking about that one. I've been trading that one off and on for a couple of years, but now I'm kind of in it. And I'm in Tesla as well. Tesla didn't make this list, but Tesla had an incredible year as well. It just happened to dip from the beginning of the year, and so that's where we are now. And this Appli I talked about. So I don't know, I talked about 5 or 6 of these stocks out of the top 15. And so if you can figure out a way to hone your strategy and focus on really good quality stocks with institutional volume to give you support, with growth, with all the things that I look for, and sell calls against them for income, not only can you get a lot of this growth, but you can also get cash flow while you wait. So let's look at why Appli was so good. Here we are, coming off a really lousy 120 all the way down to 110. I couldn't have picked the bottom going all the way down here, so I didn't, right? But when it comes off the bottom and it makes one of these, big increases from $10 to $16, that should get you watching, right? Then we had a little cup and handle form here with a long, kind of a long handle right there, and then we had this breakout. You can see the personality change on these breakouts. So a couple of high volume breakouts, look at that, and that took off. That went from 16 to 23. And it kept going up to 26. That's pretty good in a few weeks, right? Consolidate a little bit, more of a breakout, more of a continuation, high volume probably on earnings. Look at all the stuff it did, and then it consolidated here. So this is a stock that's looking, at least on the chart, like, boy, there's a lot more coming. That to me is saying there's a consolidation there. So here we are at $39.85 at the end of the 2023 year. Boom, that's where that is right there. Look at where it went. It went all the way up to $400, right? So it went from 40 to 400, like a 10x. Well, you saw what the number is. It's 800 and something percent because we've had this little pullback. But it's basically a 10 times your money. It's a life changer, right? It only takes one stock to change your life. And that's why I don't believe in diversifying yourself over all kinds of crap. Focus on really good quality stuff and just watch it really carefully and trade it really carefully and get cash flow on it really carefully. Let's look at why this did so well. Look at these numbers. Triple digits, most of them, right? Quarter over quarter numbers. Double digit growth in sales. Look at this. Now, it had a lousy year in 2022, right? And that's why we had that nasty chart. But then look at this, 289, 300%, 47%. 23% return on equity. Because we had this big number here, we don't get a good growth rate, but there's clearly a growth rate going on when you look down here. I hope that helps you understand, okay, here's what we just got in 2024. Are there some similarities? Well, there are in 2025. Looking at growth rates, looking at sales growth rates, looking at potential breakout patterns, looking at trends in the marketplace, right? Try to get in that industry or that sector that's growing. A lot of these are in that technology and semiconductors and all that kind of stuff. And so that was a big sector most of this year. Well, this past year, I guess I should say 2024. What are the big sectors coming up in 2025? What do you think is going to happen? I'll be coming up with a video here in a couple of days, maybe even today, that tells you what I think the stocks set up for 2025 are, and maybe you can follow along and maybe even join in the game here and selling covered calls against them, because it's a great way to create income against these really great stocks while you wait. And look, you can make your predictions and I'll make my predictions, and I don't like the prediction game. I'm just telling you, here's the probabilities that I see. You could be just as right as me or as wrong as me. Nobody knows. I don't know if the stocks are going to go up or down. My crystal ball is in the shop. And so I never get to use that crystal ball because it's not right. So I don't make predictions. I make probability assessments, right? And so I don't say, I think Bitcoin's going to this by next Thursday, like a lot of people do. I think that's a stupid game, right? I don't say Apple is going to go to $475 by next week. You don't hear me saying that. You hear me saying, I think the trend is up and I'm going to sell calls against it and make income. Even if I'm wrong, I still make the income, and then hopefully I'm right and reading the charts and reading the fundamentals correctly. Is that enough for me? I think so. Happy New Year. 2025 is going to be a great year. Let's make it a great year. Hey, it's Mark Yagi, and if you haven't subscribed to this channel, please do that right now. That would be a great favor to me, and plus it helps me get this material out to a lot of other people that might need it. I've got a little bit of a movement going on here, and I want to try to change the world one person at a time, showing them that you can make safe, reliable income from the stock market. And plus it helps to grow the channel a little bit. Also, if you would give me a thumbs up on the video and like it, great. If you don't like it, give me a thumbs down, that's cool. But just tell me why you don't like it so I can get better. And then hit the notification bell so you can get these videos as soon as they come out, because a lot of times this is timely information and you want to get that information before it gets stale. The last thing is to join my free Insider Tips newsletter. There's a link below and you get everything in one spot. You get breaking news and analysis also. So that would be great if you could do that too. See you soon.